Hi, good morning. You would have already seen my other videos regarding laying importance about the growing opportunities because of Make in India's vision of our Honorable Prime Minister Shri Modi Sahab. And then you would have also gone through the videos which lay stress on what type of degrees and what type of qualifications which you ought to undergo in the changing dynamics of this modernized financial markets world. In this video, I am gonna give you a brief about a must undergo training on derivatives and technical analysis. Whether you are a professional, whether you are a chartered accountant, whether you are an engineer, whether you are a CFA, whether you are undergoing CFA, whether you are undergoing MBA, whether you are an MBA. So whether you have qualified your professional qualification or whether you have enrolled for your professional qualification and beat any qualification, you ought to undergo this course of derivatives and technical analysis, the reasons which I am gonna be listing in this video henceforth. We already saw in my Make in India video that the growing opportunities in India, thanks to the growing recessionary phases and slowdown happening in the rest of the modernized world, in the rest of the developed economies like US, Japan, UK, Europe, and a bit of slowdown also, a threat of slowdown coming to Chinese market as well, has laid down a massive opportunity for us in India, which has led to a massive funds flow, or which will lead to massive funds flow coming into Indian economy because of the growing consumption and demand possibilities and opportunities which we have in Indian economy. These massive funds flow will ideally come in the form of equity market, which we have already discussed in Make in India. They would also come in the form of bond market, which we have already discussed in Make in India video. And these all equity and bond inflow will ideally come in foreign exchange, in foreign currency. That means there is a massive scope of learning and applying those learnings in the fields of equity, bonds and foreign exchange. But of course, if we have more Make in India, we have to import more goods, more resources from outside the world. We are a net importer. Indian economy is a net importer as well. So that means there will be a need of understanding foreign exchange as well, because an importer has to pay the exporter of other economy in the currency which is ideally built in dollars or euros or pounds, etc. And we have to get those converted from rupees into dollars, or from rupees into euros, or from rupees into pounds. Similarly, if we have Make in India and we tend to export our products outside this Indian economy, then also billing will be made again in foreign currencies, which is ideally freely convertible currencies like dollar, euros, pounds, etc. And then again, we need to have more knowledge, more insight on equity, on bonds and on foreign exchange. So that means growing recession and slowdown, and which has led to an opportunity which is ideally named as Make in India, which will lead to massive funds flow in the form of equity and in the form of bond market, in the form of foreign exchange, but of course, and this has already led to, and it will lead further to massive volatility. We have already seen the share market being very volatile. The bond market would also be very volatile. The foreign exchange is quite, of course, volatile. 2008 it was 40, it is hovering at 68 now. It went to 53 in between 2009-10, went back to around 50 again, then it hovered to around 67, then went back to 60, now touching around 68 levels. That means there is a massive volatility in any product you see, which is ideally commodity market, steel, iron, copper, silver, gold, or which is ideally the share market, which is ideally our Nifty or Sensex or internationally Hang Seng or Kospi or Nikkei or Nasdaq, or let us say foreign exchange, which is ideally dollar rupee or euro dollar or pound euro or euro yen or dollar yen. So that means this all has led to a massive volatility in equity, in bond market it will lead to, in foreign exchange and in commodity market as well. This means we need to have more education and practical learning as to how to manage our risk because of the growing volatility. This also means that how to manage our risk on these underlyings like equity, or let us say bond market or foreign exchange or commodities, and at the same time to manage our money well. So that means this whole of massive funds flow and volatility massively requires an understanding in fund management, and also in order to hedge the risk which has arisen arisen from these all volatilities happening across the world in the different underlyings. Everyone in this world, whether it is an individual or whether it is a corporate, whether it is an SME, any person would love to have more of money making, would love to have more of money management, and would love to have more of money multiplication. So that means everyone loves to see his money grow, multiply, and effectively get managed. But point is, particularly in Indian economy, what I have observed by my experience, you can go through my profile as well, what I have observed is that 98% of population in Indian economy, they do not study at all. They believe पैसा लगाएंगे, गवाएंगे तो ही सीखेंगे. That means you will invest money and you will lose money, and then only you will learn about the markets once you lose the money. I do not believe in this theory. In fact, 98% of the people, they do not get educated or they do not get trained, but they invest money based on views given by their peer friends or relatives or media barons coming on media like different channels. In fact, 2% remaining, so ideally 98% people, they do not have at all a knowledge, or let us say they do not take pains to get knowledgeable. And out of this 2%, 98% of those 2% people, they believe that they have studied about the markets by probably studying the financials of that company. So let us say if they are investing in Tata Motors, they'll study financials of Tata Motors and they'll say, oh, I have studied and Tata Motors is going to go up or down, whatsoever, and they accordingly take positions. And they believe that they had studied well, and based on their study, they tend to miseducate these 98% of the lot. So that means 98% they do not believe in study, and they believe in taking information or knowledge from the persons whom they believe that they would have studied. So only 2%, the remaining 2%. So 2% of the 2% people are the people who actually make money. They are the big institutions or the people who have immense knowledge about the market. So that means 98% of the investors without knowledge are there, and 98% of the other 2% believe that they have studied, and the remaining 2% of that 2%, they are the ones who move the market or who understand the market. This means there is an immense lack of education, training. People do not take pains in understanding the markets, and they simply invest or they take positions based on views, based on knowledge statements given by media people or some of their friends or relatives. So यानी कि इंडिया में पैसा ऐसा लगता है कि साहब उसने देख लिया बस ठीक ही होएगा, without even bothering कि जिसने देखा उसने कितना देखा, क्या देखा, कहां से देखा, कितना उसको खुद नॉलेज था, वो हमने कोई बॉदर नहीं करना, which is leading to massive mis-selling in Indian economy. Now, point is, through this video, I would like to draw your attention that one should undergo a certification program on derivatives and technical analysis. So ideally, when I say derivatives and technical analysis, you should ideally know why derivatives and what is derivatives. So ideally, derivatives, let me put it this way, I'm not going into the theoretical definition of what is derivatives, but derivatives is ideally a tool, a contract based on which you can ideally hedge your risk or take a speculative position. So ideally, it's a tool to either speculate or to hedge. So that means you can take position which can hedge your risk exposure, or you can take position which can further lead to speculation in that underlying. These derivative contracts, but of course are known as like futures, forwards, options, swaps, etc. These derivative products, derivative contracts, one should learn because derivatives is one of the huge market which affects the actual market. So that means the actual buying and selling of shares is quite negligible. But the huge derivative, notional buying and selling of shares, that means notional long and notional short positions on derivatives, is ideally the biggest market, the market which is affecting the actual market. Similarly, the foreign exchange, actual buyers and actual sellers is a small market. But the people who take positions on going notional buying or notional selling on foreign exchange, it's a huge market. So one should understand and learn about this derivative market, because this derivative market affects the actual market. Now, within this derivative market, ideally you are using a product of derivative so that you can ideally make money in future, or you can hedge your risk which may arise in future. But of course, future needs a bit of prediction. But of course, no one can predict 100%, but it is a law of probability. So more study or more knowledge you have, or more tools you have, or more communication or information you have, that will lead to your probabilities in your favor. So one of those study analysis in order to peep into the future based on which what type of derivative you should take is known as technical analysis. See, technical analysis ideally believes that मार्केट में कुछ भी हो रहा हो, मार्केट को सब पता है कि मार्केट में क्या हो रहा है, बिकॉज इफ मार्केट इज बिहेविंग इन अ पर्टिकुलर मैनर, देयर आर सर्टेन पीपल who know why this market is behaving in this particular manner, because they might have some information about that particular underlying, because of which the people known to those people would be taking some position, because of which certain people, if they have good hold on technical analysis, they can ideally look at the technical analysis and they can say, wow, this is going to happen in the market, which I can see from these technical charts. But point is, there are so many technical charts, so one should have original information about the information, or one should have original study about the technical charts, and not that copy paste wala study which one can read from Google, or let us say from those trainers who themselves are not practitioners. For which, in fact, going by this importance of derivatives and technical analysis, in Chitkara Financial Education Center in IT Park, in Rajiv Gandhi IT Park in Panchkula, Chandigarh, we have started up derivatives and technical analysis, majorly 3 programs. So, but of course, the first program is Equity Derivatives and Technical Analysis Foundation course. So, ideally these all courses, 1, 2, 3 courses, they majorly run on weekends, which is ideally Saturdays and Sundays. And the primary objective is that we train our student on, let us say, one Saturday, Sunday, or let us say Sunday, and we ask them to apply that knowledge during the weekdays, Monday to Friday, in the live market, and then come back on the next Sunday and tell us that what did you see? Did you apply the learnings which you had learned in the last Sunday, and did you apply in the live market? What did you see? Whether it was hit, whether it was not hit, and then come with the feedback. And then we give them again new information. So that means this course particularly runs over 3 to 4 Sundays. That means one Sunday you learn a bit, then you apply that learning Monday to Friday, then the next Sunday you come back, you tell us about your feedback, then we give you more learning, then you again apply Monday to Friday, then you again apply, then you come back again on 3rd Sunday. So that means it runs from 3 to 4 Sundays, so that the person can practically apply that equity, derivatives and technical analysis in the live market. This does not happen elsewhere in any training. This is for sure. And plus, after this equity, derivatives and technical analysis foundation course, once you believe, wow, there is some wow factor and I have been able to predict a fair bit of the market, or at least I am able to understand about the market, one would like to go for the advanced course. Because in technical analysis, there are more than 3,000 technical chart patterns and reversal patterns, continuation patterns. So one cannot understand all those patterns and tend to apply all those patterns in the live market and take the position, because जब तक आप apply करेंगे तब तक market तो हिल चुकी होगी. For which we have designed specific patented technical chart combination which we teach in advanced course. This again runs for over 2 to 3 Sundays, so that a person can again apply, then view in the market, then come back, then take the feedback. So ideally this comes as a advanced course. Now we also have realized that foreign exchange and risk management is one of those courses which needs to be delivered to the students or practitioners because of the growing importance of this course. Now let me give you a brief background on why we are doing this forex and risk management. Equity derivatives, point number 1 is equity derivatives is ideally overall a part of derivative market, not more than probably 5% of the total derivative market. So that means if total derivative market in a year is approximately $1,500 trillion, not more than 5% derivatives happens in equity. More than 90% of the derivatives happens in foreign exchange and interest rate derivatives. which means if you have to understand derivatives to the core, you should ideally understand derivatives from foreign exchange and risk management, foreign exchange and interest rate risk management. Because once you have knowledge about foreign exchange and interest rate risk management, which is ideally 90% of the derivatives, then only you will be able to appreciate better what is happening in equity market. This is point number one. Second point is, with the growing funds coming into Indian economy in the form of equity or bonds in the form of foreign exchange, plus because of Make in India, we'll have more imports and exports, which will lead to more volatilities in foreign exchange. This means a lot many corporates and lot many SMEs, they need people who can become consultants, who can guide them how to hedge their exposure on foreign exchange. Say for example, if I'm an exporter and I'm billing today on let us say $1 and today $1 is 68, and what if after 1 year when I receive $1 it becomes 60, I lose 8 rupees. For which I need an expert, a consultant who understands this market so that he can guide me when should I take a hedging position, when should I enter into a derivative position so that I can protect the 68 or make extra money over and above the 68. Similarly, on case of importer side as well. Now the best part is foreign exchange and risk management people who have hands-on knowledge on this are only rare, probably 400 to 500 people across Indian economy, which are normally the treasury bankers working with the treasury department of the banks. But of course, you can view my profile and you will come to know that why this runs or why this program gels with my profile. Now, foreign exchange and risk management program will lead for you in getting more employable opportunities, because you will be able to get more opportunities working with SMEs or corporates who need people who could guide them. Second, you can become entrepreneurs because you can become consultants to these all companies. Plus, you can also appreciate, because of foreign exchange and risk management, what is happening in equity derivatives as well. Because this knowledge is massive. This is 90% of the world market. So once you understand this market you tend to understand it in a more better way. So this is the third type of course. So this runs over around 7 to 8 weeks, ideally Sunday 7 to 8 Sundays. Now, point is, in Chitkara Financial Education Center, but of course these all three programs are ideally either delivered by me, you can run through my profile, you can see my profile yourself, and or by my team. These all team are all practitioners, they are working for me, they have burned their hands, they have learned through this volatile market, and they know that what best practices have to be delivered to the students. Similarly, this program helps in less losing of money, but of course because you tend to become more educated, so at least you will be saved from falling into the trap of various mis-sellers coming from different brokers or sub-brokers who do not have knowledge, who are not taught, because these all programs are not taught in any of the educational qualification. And believe me, whether it is MBA or whether it is CA or whether it is CFA, these practical orientation of this program, this certification, are not taught in any program. Since it is not taught in any program, ultimately the people who come across to you becoming as a consultant or a broker or a sub-broker who invest your money into the markets, they do not have hands-on knowledge onto this, and you ultimately end up losing your money. It is better you should invest your money into training yourself so that you can utilize that money in that training rather than losing that money into the market. So there are less chances of you losing money, there are more chances of you making money, and it has other inherent advantages that you become job capables. See, job capables in the sense that all these brokers or sub-brokers or bankers or corporates, they need people who are knowledgeable in this front, because everyone wants to make money. Everyone wants to make money, multiply money, which can happen only because of right decision at the right time with right knowledge. And that awareness of that knowledge or application of that knowledge is not taught in any degree program or any qualification. Even the training centers who train on this program, they take charges for, let us say, 2 days or 3 days, and they ultimately take the fees and that's it, bye bye. However, they do not give you an opportunity to apply those knowledge in the live market, which we do, because we have Sunday to Sunday running the program, and in the weekdays, during the weekdays, you can actually apply that knowledge. So once you apply this knowledge and you have hands-on experience, you become a far better job capable once you apply in any of the broking firm or sub-broking firm, or in any of the banks, or in any of the wealth management firms, or in any of the wealth management profiles in the banks, etc. Plus, you can become entrepreneurs because there is dearth of people who can be guided as a consultant or entrepreneur, guiding different people where to invest, when to invest, etc. And once you have this hands-on knowledge, you can compete anyone in the town, anyone in the city, anyone in the vicinity. Similarly, this knowledge, this technical analysis knowledge can be applied on any underlying. It can be applied on equity, it can be applied on foreign exchange, it can be applied on commodities, it can be applied on steel, copper, oil, gold, etc. See, idea is, if you learn this all stuff, but of course because of these all advantages, you will become a knowledgeable chap. Once you become knowledgeable chap, you will at least invest your money with more scientific reasoning, and you will also not misguide the other people and make them more knowledgeable, technically sound in investing or managing their money as well. This will ultimately lead to our Indian economy growing by leaps and bounds, because once we start this torch of knowledge enhancement and knowledge giving in the right way, in the right manner, then only our Indian economy can be saved from various missellers which appear on media or which come from different brokers or sub-brokers. So that means the only solution is to save our money or multiply our money, or to save others' money or multiply others' money. We need to get trained, and we ought to get trained on this dynamic profile of derivatives and technical analysis, particularly equity, derivatives, technical analysis, or whether it is advanced course or whether it is forex and risk management, so that we can gather immense lot of information, immense lot of knowledge in the dynamic world of this financial markets, and do justice to our money, our peers' money, or our economy's money. Thank you very much.